This episode is brought to you by FairDesk, a crypto derivatives trading platform founded by 6 former Binance execs and 3 former Morgan Stanley architects. FairDesk is a company focused on building a platform that enables traders to profit from both rising and falling markets. Sign up today and CB will credit you up to $600 in trading funds. For more information, visit fairdesk.com, link in the description below.
The crypto market's down about 70% off of its highs for Bitcoin. In every past cycle, you've done 80 to 85% drops.
That's right.
And that's with the Fed printing money. Here, the Fed's doing the opposite. They're unprinting. They're sucking money out of the system. So why wouldn't we do 85 at minimum in this cycle, which puts us down, I mean, at minimum to 12,000, 13,000. And so remember, people said, don't fight the Fed when the markets were going up, which was the right move. Well, now they're doing the opposite. So wouldn't not fighting the Fed be very cautious on risk assets here? My worst case scenario, 3,500, that would be a 95% decline. And that would basically align us with what Amazon did in the .com bubble collapse.
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. All right, it's your boy Crypto Blood, and welcome to another Kicking It session. Today I've got my guy Gareth Soloway coming back on the channel. Man, this guy is probably the guest that I most love having on the channel. I'm gonna be honest with you. He is bringing it raw and he brings it accurately every time, and I'm glad to have him back on. We're gonna discuss. It was crazy. I just told him before going live, I'm glad I had you scheduled for today because today was the CPI number for the previous month. So we're going to talk to Gareth Soloway today about the CPI numbers and what it has done to the markets. The markets definitely moved on this news. But first, get over to verifiedinvestingcrypto.com for more information on the services that Gareth offers, man. He's got his whole track record there, live and direct. You can check it out. Sign up for his service. It's very affordable actually for the amount of stuff you get. So Gareth, appreciate you coming back on, man, aka Turbo Trader. What's going on, man?
Not too much, man. Sure feels like I'm in a world of turbo right now with where the markets are. Holy cow, it is nuts out there.
It is nuts, and I'm glad to get you on so my audience can get a glimpse into your mind as far as where we're going and what's going on. If you guys aren't aware, as I stated before, we saw the CPI numbers come out today. It rose 0.1% for August, the CPI did. And the markets were expecting a negative 0.1%. So that's a big gap for us to see them off by that much. I want to just give you and read you this one from Mohamed Alarian, Gareth, and get your feedback on this. He said last week, Fed officials signaled more consistently that rates would go higher, not just for longer, but also in a faster way. Today's hot inflation numbers, both headline and core, reinforce the likelihood and make a third 75 basis point hike historic in several ways, a done deal. What's your take? Is Mohamed Alarian on point there?
Yeah.
Or are we going to see something even bigger than that?
No, I think he's on point with 75. And the key is going into this number, honestly, I was in the 50 basis point camp because I mean, looking at gas prices, oil, copper, all these commodities have fallen dramatically.
Yep.
And so in my head, I'm like, okay, well, we should see that trickle through to the consumer price index. And we just did not. And I think the market got caught way off guard. The Fed now is locked in at 75. I think that's a no-brainer. The reason why I don't think there's 100 is because technically the Fed is really tightening additionally by unloading their balance sheet. So I believe in September, they started to reduce their balance sheet.
Yeah. And
by reducing their balance sheet, it's technically a tightening effect as well. So if they do 75, it probably, with the unloading of their balance sheet, it's the equivalent of 100 basis points. So market does not like it. Crypto doesn't like it. Stocks don't like it. It's just risk off all the way around.
Risk off all the way around. And you brought up a good point that I don't think a lot of at least crypto guys aren't talking about. QT. Yeah. That has started this month. I want to talk to you about that. I'll pin that for later. We definitely want to talk about that aspect because that is an additional layer to me of risk off behavior that the Fed will create for us. Now, you said 75 is locked in. No chance for 100 basis points, in your opinion?
I mean, there's always a chance, right? But I think the biggest thing here is the Fed really, and this is what I've been, yelling at the top of my lungs, is the Fed has to be so careful here, because if they trigger a bad recession, ask yourself, how do we get out of that recession? Because every past recession we've gotten into over the last 10, 20 years, the Fed has printed us out of. And if inflation is as sticky as it looks, they can't do that in the future. And so if they trigger a bad recession, we may be stuck in that recession for years. And we may have stagflation, all these negatives. And I think that's a real thing. If I was on the Federal Reserve Board, which I'm not, but if I was, I would be saying, Jerome Powell, be careful here, because you go too hard and too heavy, you're going to trigger this recession, and then we can't get the economy out of that recession.
So a tweet you put out earlier today, you said, increases the likelihood of Federal Reserve will be over tightening, thus pushing the economy into a recession, at which point they won't be able to get us out of.
Yeah.
So that's kind of what you were just talking about there. Isn't that what they normally do? They underperform and overshoot. That's typically what the Federal Reserve is good for, right?
That's their playbook, man. I mean, I tell you, you'd think just dumb luck would have them time something right, but they notoriously are just the worst at doing just right? They always overdo one way and then overdo the other way. And yeah, I mean, it's I think we're going. I really
a dead clock is right twice a day. So like you said, I don't understand. They have to actually try to be wrong as much as they are, in my opinion.
Yeah. And listen, I mean, they have a hard job, right? I mean, they gotta look at the data. They gotta just time the amount of rate hikes just right. So it's not an easy thing to do, but in my opinion, I would, if I was Jerome Powell, I would do another 75, and then I'd sit back and wait multiple months to see the impact after a few months. Because if they keep on going gangbusters, there's no doubt they will cause a recession.
Yeah. So Nomura feels like they're the first bank to come out to call this 100 basis point rate hike next week. So we're going to see a period from, today on through next week is going to be pretty much a blackout period for the Feds. They won't be saying anything of much. And this leaves the markets to essentially come up with their own imaginations on what is going to happen here. So it's probably, and I'm going to ask you, do you think that this following week is going to be very volatile for all markets? Or do you think we have a clear direction in which we're going now?
So usually the way it works is that the markets, after today's data, they're readjusting very, very quickly. There'll probably be an additional readjustment for the next couple days. And then by the time you get to Friday, the markets will probably be priced in to 75, maybe 100, and they'll just sit there and kind of go sideways until we get that data from the Federal Reserve. So the market is in that. So anytime the market gets information it didn't expect, it quickly tries to readjust to factor those expectations in. And then until it gets new information, it'll kind of hover around that level. So that's what I'm expecting. Some volatility in the next few days, and then getting into a quiet period into the end.
And you're talking about a quick adjustment. I mean, look at the NASDAQ down almost 4% today. S&P down 3%. Dow down almost 1,000 points. VIX is VIX not only, it's up 7% today.
Oof.
What is that?
And that's an issue. And I know you've traded for many, many years, but you don't see a bottom until the VIX goes nuts, right? So like you want to see 30% move in the VIX where you have that fear, and then you get a bottom. 7% to me, I'm like, meh, that's not a bottom.
Just getting started, right?
Just getting started.
Yeah, this is crazy, man. And I think before I move on to the next point, you mentioned this too, because you were like, you thought that we would see maybe a negative print on CPI for this month because of the sharp drop in energy costs and gas prices and everything across the board. So that lets us know this is crazy, Gareth, because to me, seeing that we saw the huge drop in gas and other commodity prices, and yet we still got a 0.1 positive print on CPI. What does that tell you? Yeah,
what it tells me is that the supply chain is still an issue. That's still keeping prices up. It also tells me wage pressures mean that companies have to charge more for their products because they're paying their employees so much more over the past 12 months. And all of these are then negating the drop in oil. I mean, imagine if oil was still at $120 a barrel, where we would be at that point.
Oh, my God.
So, it's definitely not a good position, and you can see from the market reaction, it freaked out the markets. I mean, this was in terms of a trader's dream, this is what you love, but an investor, man, you just shake your head at it and you kind of just look to fight another day.
Yeah, and we're going to narrow down to the crypto side of things, guys. So stay tuned towards the end of this video. I want to just go macro and then narrow down to the crypto sector. So Gareth, you have a chart here. Give us an explanation of this, what you have on the screen here at QQQ.
Yeah, so this is the NASDAQ 100. And again, look at this, down 4.3% on the day for the NASDAQ 100. That is probably one of the bigger drops we have seen in one day in a long, long time. And what you can really see here is that the market going into the CPI number was rallying up because it thought we were going to see a reduction in inflation, lower inflation data. And in one day, you've wiped out 1, 2, basically 3 up days in a row. You've wiped those, and those were big up days. I mean, the S&P was up over 1% on all those days. You've now wiped it all out in one single day. And that's, technically speaking, that does a lot of damage. The one line I'm really looking at now is from this low in June to this low that we put in early September. That's your big support line. So I'm watching that closely. Can it hold going into the Fed? Do we retest it? Does it break below? I mean, how does it all play out? But if we break this line, guess where you're headed? You're headed all the way down to the June lows right here. And that would be another nasty, nasty sell.
Wow, that is insane. And I was looking at that gap down, but that's because the CPI number came out at 8:30, right? And the market.
That's right. So before the S&P opened, correct.
What else is on your radar as far as on the traditional side of things? Where do you? Okay, let me ask you this: how were you playing this? Were you neutral? Were you long? Were you short?
Yeah, so
going into this number today.
So yesterday I was the last couple days I was taking some of my longs off the table. There were stocks like NET and some of these other kind of tech stocks that had rallied significantly. So we were looking to take some of those off the table. And then yesterday I bought SDS and QID, so got exposure to the short side of the S&P. And I'll show you why. I mean, it was really kind of cool to see. If we go to the SPY chart, pre-market, by the way, we were up. And in fact, yesterday, look at this. So as a technician, you had a 4-day up move right into this pivot, which then coincides with this little pivot right there. And then it makes sense. 4 days up, got to have that pullback right off this little area right in here. So I didn't have a ton of short exposure out there, but I certainly got that exposure after that 4-day rally. Crypto-wise, I mean, you're seeing Bitcoin get slammed today. That's a nasty fall on Bitcoin. Now, interestingly enough, it came after 6 up days in a row. So 6 up days, you could argue that you were due for a pullback. The question is it just a pullback to support right here? This is where you should have support right around 20,400. If it holds that, maybe it gets another up move. I'm still in the camp, though, that when all is said and done, 6-12 months from now, we're going to have seen crypto and Bitcoin go down quite a bit more before all is done.
Yeah, I'm back in the camp as far as thinking that we've got lower lows in cryptos.
Yeah.
Especially like if you take a look at like the channel that I have here, we broke out of it. You know, this was like kind of a short squeeze to me. This whole rally here was a short squeeze that caught a lot of shorts off guard there. But now we're heading back to the top side of that channel. So I think once we get back in there, it's game over, and we're going to take out that low of 18.5 or 18.600 and start our way all the way down to those other areas. But I guess we can segue into crypto. I have this chart up for you: global cryptocurrency total market cap. Now, this range right here, Gareth, looks like a nice head and shoulders.
Yeah.
We got all the way up to, what's that, almost $3 trillion market cap. We're just above $1 trillion right now. Do you take a look at the market cap at all as some type of macro indication with cryptos?
Yeah, so I think that's definitely a chart you want to pay attention to, because just like the individual charts of the cryptocurrencies, it does tell a story. So it tells you about how much money was chasing at the highs. The head and shoulders, like you said, is absolutely crystal clear there. And interestingly enough, one interesting comparison, at the height of the dot-com era, guess what the market cap was of all the dot-com stocks? Right around $3 trillion. So a weird parity there as well with cryptocurrency top, which was right around $3 trillion as well. And now we're kind of living through that dot-com blow-up of the crypto markets.
So where do you see the Federal Reserve? What is the dot plot in your opinion, where we go with interest rate hikes? You see 75 next or this month, What about the following or sequential months after that? What do you see us going to now? Have you raised your target as far as the final interest rate hike, or give us your insight on that, your thought on
Yeah,
that?
so I mean, I was in the camp of 50 and then an additional 25 into year end. I think you have to think 75 now. This is the 10-year yield chart. 10-year yield is nearing that 3.5 double top. So again, I don't know if we'll double top and pull back here, which would indicate that markets start to think the Fed may do the 75 and then kind of sit on the sidelines. But it certainly is something I'm watching. But I would say, again, what I hope the Fed does is if they're going to do 75, I hope that they sit on the sidelines for a couple months for the sake of the economy, for the sake of everyone else. I do think inflation will come down. It's just kind of lagging at this stage. And so I just hope that they don't overdo it too much, push us into a dramatic recession. Then you see unemployment go sky high, 8%, 10%. And I do worry that that could be what the path they're on. So going into year end, I mean, I hope that they only do another 25 after this next one.
Interesting. Okay. So as we talked about in regards to inflation, CPI numbers being 0.1% with a drastic drop in energy costs shows you that there is a lot of inflation in the markets to see us print a 0.1%. The same can be said about the actual dollar. So we're seeing this inflation, right, Gareth? But this is with the dollar rallying. So can you imagine what it would look like if the dollar lost some steam here? We will really see inflation pick up a lot. Give us your thesis on the Dixie and where we go from here and how that affects crypto and the stock markets.
Yeah, so you're 100% right there. I mean, the inflation we're seeing is in spite of a 15% strengthening of the US dollar since the start of the year. So imagine if the dollar was flat or negative on the year. That's the one saving grace, I think, that at least if you go to another country, like you can go to Europe right now or Japan, and your dollar goes really far in terms of taking a nice vacation. But needless to say, it is the dollar. And by the way, it's very rare for the dollar to go up and the bond market to drop, meaning yields going up at the same time. That is super, super rare. Not a good scenario at all. That's kind of like the death march, if you will, for the overall economy. So it's something that, again, people are going into the dollar because of safety. They're very concerned about geopolitical things, Russia, Ukraine, China, Taiwan. Then you throw in potential global recession. That's making people buy the dollar. Then the Fed is tightening, which is sucking dollars out of the system. That's strengthening the dollar as well. So all of these factors are kind of coming together to create what I would worry would be that black swan event where you could get some major breakage in the system. And then the question is, you get a major breakage, what's the Fed going to do? With 8% inflation, can they print us out of that? I mean, it's nuts right now.
They've thrown all their arrows, right? There's pretty much no more tools available. What do you have here in the Dixie? What are you seeing?
So this is a trend line that I have on that I'm paying attention to. Right now, we're holding this trend line. If at some point the Dixie, the DXY breaks it, then that would potentially be a new phase. That could be the marker where the Fed starts to sit on the sidelines. It could be the marker where interest rates start to fall, the dollar starts to weaken. Maybe there's a comeback in the economy, or at least in the stock market and the crypto markets. But I think as long as you remain above that line, you have to think that markets are going to be very tricky in terms of going up.
So you spoke about bonds, right? And you know how they've been going up as well with the dollar, which is insane to me. And I hear other economists and traders always make this point about it's the rate of change that is the damage to the economy. The 10-year today moved up, I think, 7 basis points off of the news, but the 2-year moved up 17 basis points today. What is this? How is this going to affect the economy, in your opinion, and how does that trickle down to the rest of the market?
Yeah, so the fact that the 2-year is going up and well past the 10-year at this point, that's even more inversion of the yield curve, right? And basically, inversion of the yield curve is the market telling you that a recession is coming. So again, it's been a great historical predictor. The fact that we're this kind of inverted is even worse for the overall economy in terms of a kind of a signal of what is to come. But bottom line is, I mean, people are scrambling, and bond market traders are scrambling. These moves are historically out of control to see the bond market make these type of moves. And again, it's the market trying to come to grips with everything that is going on: inflation, geo instability, the economy, COVID's recovery. I mean, all of that stuff it's trying to price in. And right now it's basically flailing to try to figure it out.
Speaking of COVID recovery, do you remember when the 10-year was at 0.5, 55 basis points?
Yeah, man. Why didn't we all take out massive loans then?
Because we thought the freaking world was going to end. So
I know.
Right? Hindsight is so 2020. But man, can you imagine, like, that is over like a 5x move up since August of last year.
And think about what you just said. You said the bond market, you could have on yields, you could have 5x'd your money. I mean, that's crypto.
That is insane, right? Exactly. So where do you, with those types of numbers and stats, where do you position yourself? I know you're a trader, but we have a lot of people that watch this channel that aren't necessarily traders or active traders, I should say. They're more so maybe mid to long-term investors. How are you positioning your long to mid-term investing bag in this type of environment? Are you more in cash, waiting in dry powder, or give us your strategy there?
Yeah, so while, if you're not a swing trader, and I generally do swing trading and day trading, then I think you have to go for protection right now. I still haven't priced in that the S&P is going to go to those pre-COVID highs, which I think on the S&P is like 3,400. So we still got a lot of downside to go, probably in the next 6 months or so. What I would do is I would say have some cash on the sidelines, because as things get less expensive, there will be opportunities out there for stocks that get really discounted. And I would go towards like trusty, dividend paying. They're not sexy, but in this market, you just want to preserve capital and grow it a little bit. You're not trying to make 300% of your portfolio. You're trying to make 20% a year type thing, while everyone else is dropping 30% as the S&P collapses. So that would be the angle. Look for an IBM type thing, like GSK was one of my favorites here. If we bring up that one, this pays a 7% dividend, and look at the cliff dive it's taken down here. So I'm really intrigued by a stock like this. When you have a 7% dividend paid out, it kind of cushions the downside, and it's already gotten crushed. I also think gold. I mean, everyone kind of bashes gold, but even though gold's down about 4 to 5% on the year, that's in a market where gold, the dollar has rallied 15%. So think about the outperformance on gold. Number one, if you trade it in terms of euros or yen, it's having an awesome year. Just because it's in terms of dollars, it's down a little bit. But if someone said, hey, the dollar's going to be up 15% in 2022, I would have said, oh, well, then gold should be down 15%. The fact that gold is only down 5 or 4% tells me it's way outperforming what it should be doing. And when we finally see that dollar come in, gold should really outperform. So I think, again, conservative, but you can still make money in this market if you're conservative and do the right things.
So I see you have a green line there at the bottom. That's an area of support. What is that number there?
That's right below 1,700, around 1,683.
So we've been tapping it a few times now. Do you think that glass is about to break or what?
To me, if the dollar is going to break out, then it is going to break. I think there's somewhat limited downside. Like I would start to envision that we'll probably, you have maybe downside maximum down here, to 1550. So, I mean, it is a decent drop for gold, but it's very, very doable. I still think the bigger pattern is this move from 2018 up to 2070. In 2018, we were trading at around 1,150. We then topped out around 2,075. And all of this is inside consolidation, right? While the dollar has been generally strengthening. Like if we look at the DXY over that time period, again, look at the dollar. I mean, look at just since 2021, what the dollar's done. And then again, go back to the gold chart and you're like, okay, so for the most part, gold's just gone sideways while the dollar has been ripping higher. And again, for me, that's such a positive divergence in price action compared to the dollar, that it's a place that for safety I want to be, but also for gains down the line, I think it will start to outperform.
So what about crypto? Do you just stay away for the most part as a mid to long-term investor?
Yeah, I mean, I think that we got to get through this merge. Assuming the merge goes smoothly, everything goes smoothly, I think that's going to be a positive for crypto. For me, it's if you're a swing trader, I think there's opportunities off key support lines, but you still have to be careful. I still think that you know, the crypto market's down about what 70% off of its highs for Bitcoin. In every past cycle, you've done 80 to 85% drops.
That's right.
And that's with the Fed printing money. Here, the
Yeah.
Fed's doing the opposite. They're unprinting. Wow. They're sucking money out of the system. So why wouldn't we do 85 at minimum in this cycle, which puts us down, I mean, at minimum to 12,000, 13,000. And so remember, people said, don't fight the Fed when the markets were going up, which was the right move. Well, now they're doing the opposite. So wouldn't not fighting the Fed be very cautious on risk assets here?
You make a great point. Like, I literally could see Bitcoin going to 8,000. I think that was like the long-term trend line. And I saw, if you mapped it out, was like 8,500 or something like that with this environment that the Fed is.
No, I agree 100%. You know, my worst case scenario, and again, 12 to 13,000 is kind of my gravy zone. That's my high end target. But I could see 3,500. That would be a 95% decline. And that would basically align us with what Amazon did in the .com bubble collapse. So again, think of the behemoth Amazon. By the way, think of how awesome it did. If you bought it even at the highs of the .com bubble, you made a fortune in Amazon. I still think that's the way it's going to be for crypto. So if you're in at 69,000, it sucks right now, but I do think you'll end up making money. For those of us that have some dry powder, you have to think that when it gets to those lows, everyone is going to be freaking out. That's when you want to deploy some capital, obviously capital that you can risk.
El Salvador president, you should have listened to Gareth Salloway. You wouldn't have been dollar cost average.
Man, I tell you, same thing with Michael Saylor. I could have saved them so much money.
Oh man, Michael Saylor, another one. Man, if we go to 3,500, it is. And that's the thing, you know, I always say, hey, if you're using your own money, not leverage, it doesn't matter where you buy it, because you're long-term hodler. You're holding for 20 years, 15 years or whatever. These little moves mean nothing. But when it's leveraged and you got interest on that, you got to pay back. Timing is everything. Is that right?
That is everything to do with the stock market and the crypto market. And I'll tell you one thing, markets have a funny way of forcing people's hands. And I wouldn't be surprised if crypto goes low enough where it causes Michael Saylor to kind of exit and like short, like basically a margin call or whatever it is. Right. And that could be the culmination of the bottom on Bitcoin. And again, I've been, you know, you and I have been traders, right? Doesn't the market just push you to your limits?
Yes.
And he's like the stereotypical, like, head honcho for crypto. It would make so much sense to push him to the limit, and then that would be the bottom.
Yeah, I agree with you totally. You talked about ETH before we wrap up, ETH merger. You know, I was a very big believer of the buy the rumor, sell the news, but hell, the buy the rumor, sell the news, the sell the news event kind of got kicked off with the Federal Reserve, not the Federal Reserve, but the CPI numbers, right?
Yep.
That sell the news event happened prior to the actual event. Do you see us heading lower is what I'm asking with Ethereum, seeing that we've already seen a nice little drop in it now?
Yeah, so I mean, I'm still thinking that there's, I mean, again, depending on what the dollar does and what risk assets do, but if things calm down and maybe the Fed isn't as hawk, I mean, this is the kicker, right? Is that next week with the Federal Reserve, everyone's going to expect the most hawkish commentary that we've ever seen from the Fed. It's possible that he might just be slightly less hawkish than the markets are fearing, in which case you could get one more push up in cryptocurrency, in risk assets off of that. In fact, that's if we were to sell off going into that meeting and continue to sell off sharply, I would start accumulating some longs, maybe crypto longs as well as stocks, going into that thinking that, okay, the markets are pricing in this ridiculously hawkish Fed. If he's ridiculously hawkish, we've already priced it in, right? But if he's just ever so slightly less, maybe the markets get a bounce there. So I'm going to be watching really closely. I think Ethereum, again, if you get the merge to go smoothly, you might get a little bit of relief. I think it's short-lived, but I do think, again, you might get a little bit of relief back up. Maybe the 200 MA is one thing I'm looking. I mean, this would be a best case scenario to touch that 200 MA. It's also kind of a double top. But again, it's tricky now that the CPI number did what it did. Gotcha.
Well, there you have it, ladies and gentlemen. Gareth Salloway. I call him Turbo Trader. Make sure you guys go check him out at verifiedinvestingcrypto.com to see his signals and talk to him on Twitter as well. He's got a huge following over there on Twitter. He's been everywhere. I was joking when I said every turn I make on YouTube, I see Gareth Salloway. He's on every channel. Glad he was here with me on CBTV.
Trying to educate, trying to help people. That's the key, right? You know,
yep.
That's all we can try to do.
That is the key. It's your boy Crypto Blood. And that's another Kicking It session. Make sure you guys like, share, and subscribe to receive more videos like this. I'm out of here. Holla!